Cusick Group's securities offered by MoneyBlock. We're going to take a look at the midday. We're going to cover the major moving averages, see what strategies are being deployed, see what types of rotations we're seeing in the market. And then we'll also talk a little bit about what we're going to cover this afternoon in Tech Talk, as well as at the closing bell. So let's start with the major market indexes. They're mixed into the midday right now. Right now, you're just basically seeing institutions and traders alike making some adjustments based on the post-election trade, repositioning, so to speak. So we're going to take a look at the NASDAQ first. The composite today right now is up about 0.6%. That's been the leading group. It's been outperforming the S&Ps, the Dow Jones, and the Russell. What we have seen is the heavier weighted components of the tech index, which would be the FANGs, Facebook, Apple, and Google. Specifically, we're looking at Google, up about 2.8% today at 756.46. That's up about $20. It's been pounded the last few sessions. We continue to see that there's some uncertainty on how the growth is going to be in there. Some of the implications also with the new trade policies. Facebook, up about 1.9%. These two alone have been the catalyst for the NASDAQ. Now, of course, we have the higher beta biotech sector that has been moving to the upside. A few other components like the semis. For example, if you look at the SMH, which is the Philly Semiconductor Index, that's up about 1.6%. And we continue to see NVIDIA, ticker symbol NVDA, that's up another 3.7% today, adding to its already impressive bounce since they announced earnings. So the chip sector has also been a catalyst here for the tech sector, and we want to see that offensive sector continue to the upside. Now, taking a look at the S&P 500, up about 0.3% right now. Financials, they're actually down today. You see a little bit of a pullback today in financials, down about 1% in that sector, but month to date been very impressive. You can see that post-election and with the move in interest rate yields, the sector in general is up 11.1% month to date. The industrials are also pulling back a little bit. Again, like I said, repositioning, readjustments here, down about 0.4%. Month to date, that sector is up 6.6%, so still very healthy gains there post the election. Healthcare pulled back about 0.2%, still up for the month, 2.8%. Bottom line is that we've seen that these sectors have been on a tear post-election. You see some repositioning, maybe some small profit taking from some speculators, but the growth prospects in these sectors alone are pretty promising, especially as we start to see more of what the Trump policies are going to be going forward. The Dow Jones Industrial Average, down about 0.2% right now. You also have the S&P mid caps unchanged, as well as the Russell 2000, the small caps, down about 0.3%. Basically, you see some consolidation, especially in the mid caps and small caps. They have been on an impressive tear post-election. Obviously, the higher beta, more domestically centric stocks that are in the small cap index, they're going to be more sensitive to these fiscal stimulus policies, the infrastructure policies that could potentially be coming down the pipeline for Trump. So while those plays have been active over the last week, they're taking a little pullback here, a little rest. What we haven't seen, though, is anything along the lines of, let's say, a bounce in the yield-based or to the treasury-based markets. Any inflation expectations that have been coming around have really weighed on both the domestic treasury markets here, with the long end of the curve continuing, the yields continue to outpace the short end of the curve. So you're seeing the 10-year, 30-year continue to rise. As a matter of fact, you've seen that the 10-year is gained about 36 basis points since the election. That's compared to the 2-year note, which has gained 13 basis points, which is impressive. But still, that gap between the 2-year and the 10-year has continued to expand. Now, the yields have pulled off today. You see that the 2-year has pulled off about 1 basis point to around 1%, and you see that the 10-year has pulled back to about 2.23%, coming off around 4 basis points. But again, you are definitely seeing that, first of all, there's that rotation out of the fixed income markets, not only here domestically in the United States, but you continue to see that action in the global bond markets as well. Inflation. The inflation expectations are starting to increase both globally and here in the United States. And as we start to hear more and more, and this is sounding like a broken record, but you have to be ready for this, the fiscal policies of the Trump administration are going to be watched very closely. Now, this pullback in the yields, though, while it's put pressure on the financials a little bit, like I said, a small pullback, it makes sense. It has given a slight reprieve to interest rate sensitive sectors like utilities, up 1.6% today. Telecom services up 1.3%, as well as consumer staples up 0.3%. Now, they all have narrowed their losses over the last month. They've been down between anywhere from 2% to 5.7% in November since the election. The energy sector finally is up about 2.1%. You continue to see that crude oil futures are coming off of their worst levels. You actually see that they've rebounded about $2 today at around $45.34 on the West Texas contract that expires in December. Now, the energy sector in general has had some benefits from now the increasing speculation on the OPEC meeting on November 30th. We've talked about this. There is going to be a lot of rhetoric that's going to be coming out over the next couple of weeks. So really, we're going to have to stay focused on the data. After the market closes, the American Petroleum Institute will release their weekly inventory report. I'm going to watch that with a little bit of a grain of salt. They seem to overestimate there. I will watch, though, the Department of Energy at 10:30 Eastern time tomorrow morning. That is going to be a report that I'll watch closely. Last week, they did say that there was a small build of a couple million contracts. But again, we're going to keep an eye on that data. That's firm. And we'll watch the rhetoric that's going to be coming out revolved around the OPEC meeting, where they're going to start talking about capping future as far as capping their pumping, so to speak, of new products. So till then, meet us at Tech Talk at 3:30 Eastern time. We're going to break down the technical components with charts, and we'll also rehash the closing bell going on with today. So till then, have a great rest of the trading day, and we'll talk to you soon. Thanks.